Another week and another month in the books for my trading my own strategy on these prop firm accounts. As it is the last week of the month, I will be reviewing my performance for not only this past week, but the whole month. Let's start with this past week. So this is my Canva design for September. And in this bottom right corner here, we have the last week of the month. So up top, we have my performance here. So I took 4 trades, won 2 of them, and made 1.65 R, which is around $990. I will show somewhere on the screen what profits I actually made on the broker. It's actually a little bit more, but basically the same. I took every trade I was supposed to take and not any extras, which is a win regardless of the P&L. Following the rules is always the goal, and having my performance here perfectly mirror the expected performance here is ideal. So the numbers here on the left side of this dash represent, in an ideal world, what I would have made if I didn't have any contract limitations, but this is the real world, and I am using a prop firm that does have contract limitations. So on the right side, you will see the number that represents what I would have made if limited with contracts, which on my funded futures account, that is the case. So either way, you would have made the same amount. This is just a way that I can track if I was on a different prop firm like Apex, where I didn't have a contract limitation. 10 contracts is plenty for me to risk specifically what I want for every trade. Then those would be the results for using different prop firms. It allows me to see the difference in that. And that's kind of what this yellow note is referring to. I was only able to risk 0.85 R, so it was like $500 or so, instead of the 600 that I usually like to risk. So I was just questioning, how should I record that? And I decided I want to record both, and this is how I'm going to do it. I also had a dynamic risk situation in past months. You can see with risk here, that's going to refer to if there's characteristics about the trade that I do not like and cause me to risk less, then those would be the profits made if I was using that dynamic risk system. On the left would be in an ideal world without contract limitations, and on the right with contract limitations. So again, those numbers are the same. It just how the dice were rolled this particular week. You lose a little less on the losers, and then you make a little less on the winners, so it just kind of evens out. But for now, I just like keeping things simple as I'm creating these good habits, so I'm not using that dynamic risk system as of right now. So scrolling back up to my performance, the only note that I have is that I did a really good job controlling my emotions in the form of urges. For me, it's usually very hard to identify if I'm experiencing a feeling unless I find myself wanting to make an irrational decision. It isn't until that I acknowledge the urge to make some decision that I realize, oh, that decision would be breaking my rules. I must be feeling something that is causing me to want to make that decision, and I can connect that urge to a feeling. A perfect example being on Thursday here during this trade. So this is the trade on Thursday on oil that I took, right? So originally I didn't realize that it was a 1 candle setup, which means I should have risked only 1 R. I should have taken my profits at 1 R, but that's neither here nor there right now. In the moment, I did not realize that. So this is the original stop loss. I had 14-point stop loss, a 28-point target, and it had actually reached, it was coming close to that target, and because I usually like to risk $600 on every trade, I wasn't able to do that with the stop loss size. With the contract limitations, I think this was risking like $450 or something like that. And because I had to risk less for the stop loss size contract limitations, that means I would make less as well. My greed showed in the decision of wanting to move my take profit further and kind of make up those lost profits. Now, once I realized that that irrational decision was attached to the fear and the greed that I was feeling, I took my profits at 2R like I was supposed to. And followed my rules. So I'm proud of myself for doing that. Because as you can see, it wouldn't have really gone much further anyway until going back to my entry. Everything else this week, though, I did really well with. I controlled my urges to move stop losses, not take certain trades, take certain trades, and whatnot. The only other decision that I want to go over is not taking a good looking setup on Friday. This was gold on Friday, and this setup looked premium. I mean, we have on the higher time frame, it's kind of in a range here, and we broke out of that range, and we're coming to retest, right? Gold has been bullish for a while now, okay? News came out right here, or it's actually it was at 7:30 over here. So we got some slightly bullish news that carried on into market open. It retested this low probability demand. The only reason this wasn't a valid setup for me is because this was not high probability. If this candle had gone to up here or so, and then the gap attached to this candle would immediately attach to the zone, then I could have taken it. But that is not the case. This wick here is invalidating the setup, making it a low probability demand zone, which is why I didn't take it, but I was looking at it. The EMA was slightly angled. It was we're trading above the EMA. We had a break and retest of a range. We were looking bullish. News was in our favor. We had no closure inside of the zone. We had a little fake out, and after the fake out got a good candle closure, and even if I didn't want to get in on this candle, I could have gotten in on this one where this smart money candle took some liquidity down here, closed above. It's a beautiful candle to get in on, and still would have made plenty of profits if I closed at 2R. That would have been right here. So either entry would have been great, and all the confluences were lining up. There was even a low impact news at 9, so this candle. And when there's low impact news, you don't really have to worry about the volatility getting you out of the trade. The low impact news, if it reacts from it, will either guide your trade in the direction that you think it's going to go, or you just simply lose, and you would have lost regardless of the news. So I do want to take that into account, and I might consider taking setups like these in the future. I did go ahead and put this over here. For right now, I want to build good habits. Taking this trade would have broken my rules, so I do not regret not taking it. But in the future, when I have built good habits and I'm following my rules more consistently, this might be a type of setup that I'm willing to take, because this was screaming at me. I mean, everything was lining up. I did really want to take it, but again, had to follow my rules. So I'm not ready to make intuitive decisions like this quite yet, but I will keep this in mind for the future. So now I want to zoom out and look at my performance as a whole. So my performance up here is going to be in this green bar. I took 12 trades all month. I won 7 of them, and I made about 1R. Now there's a couple reasons for that. I was supposed to make a little bit more. The expected results were about 2R, 2.5R. So again, the left side here is it with no contract limitations. This is no contract limitations with a dynamic risk system. This is the results with the contract limitation. You actually would have made more this month. And this is using the dynamic risk system with the contract limitation. Now don't mind this. This is a type of setup that I do not take anymore, but I do want to keep tabs on it in case in the future when I don't have to worry about drawdown as much, I might start taking it. But don't pay attention to that right now. I'm not really doing that. So my performance for the month as a whole was pretty good. I did not achieve the expected profit for 2 main reasons. I did not trade Labor Day, which I'll zoom in here, but Labor Day presented a couple setups and I would have profited. I don't regret not trading it, but you know, it is what it is. And then that same week, I did take a trade that I now know I will not be taking in the future. So this trade here, we're in an uptrend. We're retesting this high probability demand zone. There is a little gap right there. We did not close in the zone. We had some good confluences, but I never got a strong closure above the 13 EMA. This was the first candle that closed above, and I do not like that wick. Same with this candle. And then we got a bearish candle, a very weak candle again, and then we finally got a strong candle. But by then, like, we're about to test these highs. The stop loss was very big. I mean, it's 1, 2, 3, 4, 5, 6. We're talking 30 plus minutes after we tap the zone. We finally get a candle, and it's 625. This is almost 11 points away from the top of the zone. We've already made the move. The move for the day has already happened. So this is just a trade that I will not be taking in the future if it happens this long and this far after tapping the zone. So during this month, I broke my rules twice in total. Actually, technically 3 times. I was unaware of one of those times. But those 2 times were both in the same day. It was week 3 on the Friday. So this day being, I actually took, you can see this candle closure, it closed pretty much right on that 13 EMA. Whenever it closes on top of the EMA, I do not take the trade. I usually wait for one more candle closure. That would have had me get in at this candle down here. It would have been a loss instead of a break even, but that's not the point. As you can see, I wrote right here, I need to be following my rules. It's not the point. The second time I broke my rules, if I scroll down here, my mouse sucks. I had to leave for work. This trade was, I was like right here in the trade, so I wasn't quite 1R in profit, but I was approaching. I had to go to work, so I didn't really want to have to manage the position in the car and move my stop loss to break even in the car while I was driving. So I just put my stop loss to 1R, as this was already kind of high. It was late in the day. The stop loss was a little on the bigger side. I didn't think it was going to run that much, but it did. It was the end of the week, so there was no opportunity for me to have FOMO and make irrational decisions or anything. But I should have just managed the trade. I could have done it, to be honest. Even if I had to pull over, like, fuck it, it's worth it. If that's what it takes for me to follow my rules, like, I'm here for it. I also have changed my rules a little bit during this month, which has kind of skewed results a little bit. So up here, these are some decisions that I made from research. Beforehand, I was using structure to decide when I would take profit. I had 2 different take profit levels for every trade based on structure, whether it was a gap or liquidity. I have since decided that I am just going to take, unless it is a 1 candle setup, I am going to take all setups full profit at 2R. If it is a 1 candle setup, then I need to take full profits at 1R though. I have also decided from research that I need to be rounding my stop loss sizes to even numbers. So after week 1, on Friday here, week 1, I had this trade where I had the stop loss very close to risking $600, but not quite, and it would have won regardless. So this is kind of an example of where I did research, and having that extra point of stop loss and therefore also actually having an extra point of profit is to my benefit. So the new rules being, if a gold trade has a stop loss above 5, I am rounding it to 6. If I deem the stop loss to be safe around 7, then I'm moving it to 6. If it's 5.5, I'm moving it to 6. If the stop loss is 10, I am moving it to 6. If the stop loss is between 3 and 5 for gold, I'm going to move it down to 3. Usually this does not affect the profits. If it does affect the profits, it's in my favor. It allows me to risk a $600 instead of $450, and then as my strategy wins more than it loses, I'm making less on my winners, and it's not accounting for those losing less losers. And then if it's between 2 and 3 for gold, I move it to 3 as well. I round up in that case. If it's below 2, I round it up to 2. And then for oil, if it's above 20, I am moving it to 30. Unless it's like 21. If it's like 21, 22, and I'm kind of stretching it, I think it doesn't need to be that big, then I'm going to move it to 20. But if it's like 21, 22, and I'm kind of making the stop loss a little too tight, and in reality it should be like 24, that's when it's like, okay, I'm going to move it to 30. So going into October, I'm definitely focusing on following my rules and journaling like always. These are habits that I've been working on, building that are becoming more and more natural to me, but are not yet concrete in my brain. I believe it takes like 60 something days to build a good habit, and I am just not there yet, at least for days in a row, for building good habits when it comes to journaling and all that. I will continue to not have my phone with me during the trading session as well. I do believe that is beneficial for me, helps me stay focused and aware, although allowing me to doze off easier some days when I don't have something to distract me, but there's other solutions for that. I don't anticipate changing my rules at all anytime soon other than my exit strategy. I do want to look into different exit strategies, whether that may be going down to the 1 minute and waiting for a certain candle closure, maybe using the 13 EMA on the 1 minute. These are just some ideas I will backtest, but even if I find some results, I will not implement these changes until at least November or so. But it's been a good month, and I hope to build on that for October.